Hello, this is Seewing Yee from the Listen Network. Thank you for listening on this presentation. This is the Buffalo, New York retire with high cash flow for passive income. All right, so this is I think the fourth time I'm creating a video and presentation for this particular market in the past month or so. Well, here it is. Coming to you from a little bit of a different angle. Right, so urgent news. Once again, over the years, I've been doing this business for many, many years. There's up cycle, down cycle, there's timing aspects of pulling the trigger. And in any particular market, especially right now, a particular market, a particular city, the all the good deals with the pent up demand is pretty much gone, sometimes within 6 months, sometimes within a year. So, although I do not have a crystal ball, but this unique Buffalo market is something I feel very proud of. Uh, Meaning that like I said, I feel very proud because I found this market ahead of the curve compared to our competitors, compared to what everybody else is focusing on. So again, the key is buy in the early stage of this Buffalo market. Before long, other large investment groups from overseas, as well as savvy big pockets US investors, will enter this Buffalo market. It's a matter of time. Could be 6 months from now, could be a year from now, but right now, the amazing deals is just mind boggling. And so, therefore, number three is buy often and buy smart. And you need to become a uh, hedge fund investor, as I alluded to on my earlier webinar presentation. All right, so I have a specific strategy for this particular presentation. So I'm using a very unique uh, strategy, which we talked about from time to time over the years, using the 10-10-10 rule. 10-10-10 rule means you buy up to 10 rental properties, retire in 10 years with $10,000 of monthly net income from your real estate portfolio and around $1 million in net worth. But before I go over that, let's go over the pro forma. When you click, I took the liberty of providing two pro forma. One is a single family home rental here in Buffalo. The other one is a triplex. But of course, on your own, you can click on this link and you'll see all the details with respect to all the calculation. But suffice to say, but by the way, this is a sample property. I believe this one of these properties already sold, as I recall. This triplex right here, but this single family home, I'm not sure. Anyway, but on a weekly basis, we have inventories available, but the inventories are always very limited, just like any other market that we are promoting here in the Midwest. Does not matter. It's bidding war and multiple offers everywhere, including Buffalo. Trust me, that's what's happening. All right, so this particular example here is a single family home, 59,500. If you put 25% down financing, which is great, right? Yeah, even on this low price, we can get you financing. Amazing. The gross monthly rent is $1,000. This is unbelievable. I say it again. I've never found in the past several decades of real estate investing any real estate investment property or getting this kind of capitalization rate, this kind of cash flow, and what have you. Anyway, monthly rent is 1,000. Already pre-leased, as you know. Rent to value ratio is 1.7. Right? I mean the benchmark is 1%, but you're getting 1.7, which is astronomical, and the capitalization rate is 13.8%. I taught you guys very well, right? I have taught you guys on the previous webinar presentation video about how to calculate cap rate, cash on cash return, and what have you, right? But I'll briefly remind you, the cap rate is your annual gross income minus your annual gross expenses, excluding your mortgage. Your mortgage is never a factor, and then divided by the purchase price. So if the cap rate is around 6%, you should have a little bit of monthly cash flow. If the cap rate is anything higher than 10%, wow, that's an amazing investment. But in this particular case, the capitalization rate is 13.8%. Once again, very mind-boggling. Cash on cash return is 31%. When you do financing, you're leveraging your money. That means your cash on cash return is pretty high. But the benchmark is around 7 to 8% cash on cash return. But in this particular case, it's 31%. So how you calculate cash on cash return is your annual net cash flow divided by your down payment. Okay, you get that? Your annual net cash flow divided by your down payment. Annual net cash flow, the formula for that is your annual gross rent minus your annual mortgage payments, your annual real estate taxes, your annual insurance, and your 5% maintenance factor, 5% vacancy factor, and minus 10% property management fee equals your annual net cash flow. Divide that by the down payment. Then, in this case, cash on cash return is 31%. That means the first year you're getting 31%. So if this number continue, so in about a little bit more than 3 years at 93%, right? A little bit more than 3 years, your cash flow pretty much equals your down payment, right? You'll recoup all your down payment back within slightly more than 3 years. That hence this 31% cash on cash return. You get it? Pretty simple, right? All right. Anyway, in this case, 25% down payment, your net monthly cash flow, is $458. Okay, extremely good. And you're at risk on your investment, your down payment that is 17,875. All right, keep that in mind. I'm showing you some example, and I'm showing you another example that typically our Buffalo private listing inventory that comes out every week. This is a $63,000 triplex in Niagara Falls. Wow, and the hits keep on coming. Triplex purchase price $63,500. You put 25% down payment. The gross monthly rent on all three sides, on all three different units, is $1,375. So a little bit below $500 per rent unit per month. So rent to value ratio is a whopping 2.2%, and a capitalization rate another whopping 14.8%. Oh, amazing! Cash on cash return 34%. Net monthly cash flow is $537, and your total down payment is $15,875. Truly amazing. All right, so let's go over the 10-10-10 rule, which we already did, right? Buy 10 investment properties, retire in 10 years with $10,000 monthly income and $1 million net worth. So, okay, we can accelerate that. How? Bear with me, okay? I'm going to show the big picture. So you put in approximately 17 grand on each property. So if you want to buy 10 properties, equals $170,000 total cash. $170,000 of total pure cash. This is strictly financing on all the mortgages, 25% down, whatever, right? Up to 10 mortgages. Fannie Mae loan guideline. Right? So this is one very specific strategy, taking advantage of leverage, taking advantage of leveraging your mortgage, make your earnings higher. So if you're getting $500 per monthly net cash flow per property, if you ultimately buy 10 in the next few years, 10 multiplied by 500 is $5,000 of monthly retirement income. So what other investment vehicles can you achieve with your $170,000 of cash that equals $5,000 monthly retirement income? You know, I don't have an answer, and I think you don't either, right? So you may confront me on that, but you're going to be wrong. There's no other investment that I could think of you can get this kind of a return. So, however, this is not the end. Can you retire $5,000 per month? Oh, absolutely. I think so. If you live modestly, yes, you can. Doesn't matter where, in California or any of the other 49 states, or even overseas, especially overseas. You can quit your job, replace your check, right? Replace your earned income. 5 grand. That's pretty good. Now, that's not the end. Okay, I have another sub strategy. However, if you use, or I taught this in class, right, a number of times, acceleration of your mortgages. If you use your existing monthly cash flow from each property to pay down the loan on each property by making one extra payment per month, that means you're making your regular payment mortgage on your rental property, but you are using your cash flow from each property to pay down your mortgage once a month. So 12 times a year, you can accelerate your 30-year mortgage, and if you take one, it'll pay it off in 7 years. Get it? So instead of retiring 10 years, you can retire in 10 years. This time, I mean, instead of retiring 10 years, you can retire 7 years. This time, you're debt free. All the mortgage you obtain initially to buying all these 10 properties are free and clear in 7 years because you pay one extra mortgage per property per month. All right? Very, very simple concept. So, so each property will then have, instead of having, like $500 monthly net cash flow per property, so you have no underlying mortgage on any of the 10 properties. So the mortgage typically is around 300, right? Monthly. So since you have no more mortgages, you're debt free. So your net cash flow per property, being having no debt, is 800 per property. Let's do the math, right? Right here. So 800 multiplied by 10 equals $8,000. You can retire, or whatever the definition of financial freedom. You can quit your job. You can work part time. You can continue working, but you have some choices. You have some options. So you can quote unquote retire with $8,000 of net monthly income from your 10 properties, having no debt, no mortgages in a mere 7 years. 7 years from now, not very long, right? Yeah, time go by fast. So all the while, we're not even talking about appreciation and equity growth, and you will, I think, going to have some equity growth in many of these Midwest markets. Yes, yes, Midwest markets, New York State, Pennsylvania, Indiana, Ohio, Missouri, Michigan. All these Midwest areas have some tremendous real estate investment opportunities, high cash flow, and even potential for appreciation, believe it or not. Okay, that's all I have to say. Well, actually, not yet. First of all, get your loan pre-approval, all right, through my loan agent, Richard Avani. Oh, by the way, the other strategy, okay, we talk about financing, right, or your term mortgages. The other way to achieve retirement is buying all cash. Buy any of this $50,000 to $60,000 all cash, with a lot of people are doing. And of course, using your self-directed IRA to buy it as well, all cash, which IRA, right? And here's my contact information, Brian Davis, for IRA transfer into a self-directed IRA. All right, that's all I have to say. Thank you so much for listening. And of course, the next step is contact me so I can get to know who you are, what makes you tick, what is your motivation, what is your commitment, what is inspiring you. Are you prioritizing real estate to do these kind of things I talked about, or even if you have a full-time job, even if you have full-time family obligations, you can still do this artistic turnkey investments and do it well, as long as, well, I'm hoping that you do it through me, Seewing Yee. All right. Thank you. Contact me and we'll go from there. Thank you so much. Have a blessed day. Goodbye.